Hey, welcome back. Today is January 26th, Tuesday, and on this post, I'll be telling you about the overall crypto markets very quickly, which includes Bitcoin dominance and Bitcoin price action, before diving into Algorand, ALGOUSD, and see what exactly is going on in this market since the last time I've spoken. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks upon a successful sign-up and a qualifying deposit of $100 as of today, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculations, opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what exactly is going on in the markets first. Most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? The time frame I'm focusing on right now is the daily time frame because it's at a key support again before deciding if it's going to continue downwards. If Bitcoin dominance continues downwards, I would expect better price action for the altcoins, generally speaking, as opposed to if Bitcoin dominance was trending upwards. Now, the key support here I'm looking for, the price action to break, is the daily 200 right here, currently at about 62.85%. If the price action on the daily time frame here breaches this key support, I would expect Bitcoin dominance to continue downwards. Bitcoin price action here has not done too much, as we do see here for quite a few days. That's very ideal for trading altcoins in my opinion, if Bitcoin price action does very little. Of course, the daily 21 MA is still the key resistance here, pretty much above the top trend line, and the daily 50 MA is right below the price action right now, about 29.4K. Okay, that is still the key support. I'm looking for the price action to hold above. If this daily 50 MA does not hold, then I'll be looking for the 3-day 21 MA as the next level of key support, which is some way down. It's about 27.4K. However, in this case, I still don't think I would need to invalidate this falling wedge pattern because it's right underneath this bottom trend line right here. So I think that is still good news for Bitcoin. Like I said, if Bitcoin price action dumps, that would have an effect on the altcoin markets. The magnitude of that effect would depend on if Bitcoin dominance was trending upwards or downwards. Let's take a look into Algorand, ALGOUSD now and see what exactly has it done. So since last time I have actually made a post on Algorand, I did say that it was running within a rising wedge pattern. Last time, I believe we still only had 2 swings down, or even not even a complete swing down, because right now there is a one-off occasion right here, this candle wick. I would discount that and still say that this rising wedge pattern is still intact. Rising wedge patterns are bearish patterns, 60% chance of it breaking downwards. Verify that stat on your own. If it actually does break downwards, I would say from this support level right here, just for convenience sake, because if this support level does not hold, it could be that the price action is breaking down from this rising wedge pattern. That is just a possible scenario, not absolute. If it actually does break out at this point, around February 7th, I do have a measured target of about 41 cents. Now, measured targets are theoretical targets only. It may actually be different in real life price action. There's quite a bit of supports between the breakout point and the measured targets, including the fib level here at about 50 cents, as well as about 44 cents, 45 cent area. Those are just the fib levels that could be acting as key support. the moving averages that could be acting as key support includes the daily 21 MA, which is the blue line right here, and the 12-hour 50 MA, the white line, pretty much parallel with this bottom trend line of this falling wedge, this rising wedge pattern right now. Now let's take a look into the RSI here, because I think that is more of a factor for seeing where this price action might go. Okay, right now I do see. Let's focus on the daily time frame, because the daily candle here closes in a little bit more than an hour. Okay, but even though we do seem like we're going to finish with the higher high, there's still possible bearish divergence. Well, I think it's very likely bearish divergence here, unless it makes a very significant move, because the RSI reading I'm actually looking to beat would be right here, about 72. Okay, currently the RSI is about 64. So quite a bit of way to actually beat that RSI reading difference to negate this bearish divergence. So this is my very short analysis of Algorand ALGOUSD. Let's take a look into the 3-day time frame as well, which closes in a little bit more than a day, but there's still a possible bearish divergence scenario here as well. But I think this RSI reading from the last high here is very beatable, unlike the daily time frame. So the last high I'm actually looking to beat is about 67. Currently, the RSI reading is about 64. So that is not as too far of a shot as comparing to the daily time frame. Let's take a look into the bullish and bearish case scenarios. Bullish case scenario. Now, this price action could be either making a very significant move and actually negate this bearish divergence on the daily time frame. I think that's more of a long shot here. Okay, that's bullish case scenario number 1. Bullish case scenario number 2. It could be that we finish with a lower high than the last one, than the last high right here. That would not give me a conflicting signal and possible bearish divergence, and then make a significantly higher high on tomorrow's candle. Okay, so avoid that bearish divergence today by making a lower high instead, and then make a significantly higher move tomorrow's candle. Okay, those are my 2 bullish case scenarios. Of course, still looking for a break above this rising wedge pattern to completely invalidate this rising wedge bearish pattern. In that case, I'm looking for a break of the upper trend line after observing that possible bearish divergence scenario I just talked about. So depending on the date that the price action breaks or even attempts to break this upper trend line, then we will have to extrapolate this upper trend line and see what price level we are actually looking to break out of. So for example, if we are actually looking to break out of this rising wedge pattern by tomorrow, then I'm looking for a break above about 60 cents to actually break out of this rising wedge pattern. Obviously, if the price action actually if this price action actually runs longer within this rising wedge pattern, then we're looking for a higher price to actually break out of this pattern. Okay. Now those are the bullish case scenarios. Let me reiterate. First of all, avoid this bearish divergence on the daily time frame, either with the lower high or with a significant move on today's candle or even tomorrow's candle. Okay, it could be that we finish with the bearish divergence on today and the bulls don't lose momentum here and still make a pretty significant move for tomorrow's candle. But that is what I'm stressing here, the bearish divergence on the daily time frame. And then the 3-day time frame as well, just depending on how tomorrow's candle actually closes. Bearish case scenario here. If the bearish divergence actually plays out here on the daily time frame, then the key support I'm looking at will first be about the 57.5 cent level. But my conservative estimate whenever I do see bearish divergence on a specific time frame is that it's going to fall back to the closest moving average on that specific time frame. In this case, would be the daily 21 MA right here. That's the bearish case scenario. Furthermore, if this pattern does not hold, it could also break down. And in that case, I would look for the interaction between some of these key support levels and the price action to determine or predict if it's actually going to go all the way to the measured target of about 41 cents. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.